And a lot of times people think they've got a plan, but they really don't, right? That it's not, it's not really specific. So for me, it's about having some sort of roadmap. And entrepreneurs get a little squishy when you bring this up, right? Entrepreneurs are like, oh, well, we're opportunistic. We don't have a plan because the plan is this, and we've got an opportunity way over here. We can't do it. No, that's not what I'm saying. You want to stick to the plan, but you don't want to be so married to the plan that you don't take advantage of opportunities that make sense for you and make sense for your company.
You're listening to Freight Famous, presented by Rose Rocket, bringing you the people that make trucking move. From behind the scenes into the limelight. Here's your host, Justin Bailie.
Hello, everyone, and welcome to Freight Famous, a podcast produced by Rose Rocket. New episodes of Freight Famous will be released about twice a month. On this episode, we talk with guests about how they build, scale, and automate their trucking and transportation businesses. Before I introduce our guest today, I'm excited to tell you about Rose Rocket's TMS referral program. If someone you know is looking for a TMS, Rose Rocket would love to have you join our incentivized referral program, meaning that we give you money if you bring us people. To learn more, email us at referralpartners@roserocket.com, and a member of our team will be sure, they'll be in touch. I'm your host, Justin Bailie, co-founder at Rose Rocket. I'm super excited to introduce my guest today, Mike Riccio. Mike Riccio is founder and CEO of More Than Miles Consulting. The firm helps third-party logistics, 3PLs, and transportation brokers develop strategies and tactics to achieve their business goals. Prior to launching More Than Miles Consulting, Riccio was Chief Marketing Officer at Leonard's Express, a leading transportation service provider that offers refrigerated trucking, dry van warehousing, and freight brokerage services across the United States and Canada. With over 35 years of experience, Mike is actively involved in the transportation industry. He also serves as the chairman of the Transportation Intermediaries Association, the TIA, and is a certified transportation broker. Welcome, Mike.
Thanks, Justin. Actually, I need to change that bio a little bit. I am now the past chairman of the TIA. I just passed the baton to Mark Christos, who's the current chairman in April. So
okay, breaking news. Breaking news here. It's not a live show, but heck, when it gets out there, that this industry doesn't exactly move quick. So that may be cutting edge. Let's make sure we get that out there, folks. I'll mention here just for the audience, this is going to be a shorter show, and you may have noticed that depending on the app you use to view or listen. Simply a bit of a scheduling conflict, predominantly my fault. So what we're going to do here is we're going to jump right to some sort of top fives. We're almost going to do like a Freight Famous vignette, if you will, today. So I want to go into Mike's background a little bit. We did that sort of in the bio, but Mike, if you want to just give me a quick introduction into maybe a little more color based on that bio and how you got into consulting.
Well, sure. So I started working for my father-in-law's trucking company. My wife and I were high school sweethearts. I was dating her in high school. He owned a trucking company, and I'm not sure why, but he hired me. And I've been in the business ever since. I started, I hate to say it, but it was 1987. And the sales and marketing really was really my background, business development for the most part. That was a straight up trucking company. He ended up selling that company in the late 90s and over maybe a longer series or maybe at a couple adult beverages. We'll talk about what happened there, but that didn't go well. And in 2001, my in-laws, my wife and I, one of my brother-in-laws, and a family friend started a company called Leonard's Express. And Leonard's Express at that point in time was a brokerage company. Very shortly thereafter, my other two brother-in-laws joined the company, and we grew the company to became a hybrid operation, a trucking company and brokerage operation. My role at the company was business development and sales for the majority of my time there. And then the last half a dozen years that I was there was predominantly marketing and sales strategy. During that time period, I joined the TIA. It's kind of like Hotel California. I've been you can check out, but you can never leave. I've been on the board since 2006. And however, over that time, one of the things I always make this comment, working with my brother-in-laws and working with family can always be a challenge, but ultimately we love each other. Ultimately, we trusted each other. And while sometimes we may have different visions of how we were going to get to the end goal, we knew we could rely on each other and trust each other and count on each other. And a lot of small brokerages that I came in contact with at the TIA didn't have that, right? They were trying to bootstrap their business, trying to, a day turned into a week, turned into a month, turned into a year. And at the end of the year, it's like, how'd I get here? Might not be bad, could be good how they got there, could be bad. And so really, I was always kind of drawn to how could I take some of the experience that I gained over the years, both positive and negative, as we grew our company, and take that and help people out. And so at the end of 2021, I approached my brother-in-laws and we decided I left on good terms and exited on good terms. And I was going to work with, some smaller brokerage companies that then help them grow and achieve their goals. And
Cool.
That's really kind of how I got started.
I should add, it's I don't need to add this, but I feel like I want to. Is you made the comment, and I hear this a lot of we had an experience, and I probably need to have. I'm going to paraphrase. I'll tell you about it over a few beers. One, I need to start recording all of these because these are all the conversations I want to have. Because those are all the ones like we can't say it now. There's a bunch of shit in there, and I want to hear all about it. So I'm going to start writing these down, call people out on it. And the amount of times that I've heard that in this space, I probably can't take everyone up on it because I'd basically have. Like psoriasis of the liver, most likely. Yeah, so I can't actually do it and execute on them, but I am gonna make a mental note here to write these down. So when I do see you out in the world somewhere, I'll say, "Hey, I've got a couple beers waiting over here. I want to hear that story now."
Yeah. It's not that great, but the business. I don't know whether it's like a disease or an addiction, right? You just can't get out of it.
Addictions generally are diseases, so it sounds like it's probably both. So I guess. When working with brokerages, let's just jump this sucker. What are the 5 golden rules for opening your own brokerage? I'm gonna just throw it out there like that.
Well, I think there's a lot of golden rules, right? And we'll start with 5, and I don't think these are really in any kind of order, but I certainly think cash and financial stability is what I would think is number 1 or forefront, right? I think that a lot of entrepreneurs are typically sales orientated, right? They've got a lot of initiative, they got a lot of drive. Maybe their strength is not financial education, or they got the business, but someone else handled how it got billed, how it got paid, and how they got taken care of. And I think a lot of times financial stability and cash goes. You don't think about it when you're getting going, right? You're all excited about bringing new business in. And well, if you're getting paid in an average of 30 days and you're paying your carriers quicker than that, right? If you're paying them in 7 days or, immediate pay or 14 days, you've got to have either a line of credit or cash to make that happen. And I think sometimes, especially when companies grow, they don't think through that growth. And I always go back to early in our career. I remember sitting down in front of the bank with my father-in-law, quite frankly, and I had some new business, right? I was all excited. I'd landed a couple new accounts. We're a relatively new broker. It's 2002, 2003, and we've got this business coming in, and we needed to increase our line of credit because we were going to be paying these carriers a lot quicker than we were going to be receiving the money. And I don't think really our bank quite understood what we did, right? I don't think they understood trucks and trucking companies because there was hard assets there, but I don't think they really quite understood at that point in time the supply chain as we all know it today and what our role was. And they wanted more collateral. Well, at that point in time, everybody in the company had already given them all the collateral and personally guaranteed everything we all had. And we didn't. They said, well, I forget what the number was. Let's say we need another $100,000 from you. And we're like, well, if we had that $100,000, we wouldn't be sitting across the desk right now asking for this money. So I think sometimes you really got to think through, how am I going to cash flow this, and can I cash flow this?
So how much money how much is enough? And I know that's broad because you could, if I want to move 1,000 truckloads tomorrow, then you need a lot more. But like, I'm just, so let's use that persona who you described, because I feel like I know them well. In fact, at one point in my career, I was that person. So I am, I'm a sales centric person with a book of business or short vision towards acquiring a book of business and standing up a business where I can maybe hire a couple people along with myself. And what am I thinking about? Is it, and how am I thinking about it? So am I thinking about 90 days of burn? Am I thinking about payroll set amount of times? Am I thinking about floating n amount of receivables? Like, how should you think about it in a real sort of practical sense if I'm taking notes here on how to start a brokerage from Mike?
Yeah, and I think certainly from a practical perspective, you want to bring, if you're sales minded and orientated, I'm very similar. You bring someone in that is not, right, that is more financially orientated, that has either a banking background or financial background or an accounting background, and you want to sit down with that individual, and we can, you can get into the numbers, and I should know the numbers off the top of my head, but I don't. Like, okay, I've got $1 million worth of business. How much cash should I have on hand to do that? But I think really, Justin, what you do is you sit down with either your bank or you sit down with someone whose mind works that way or has that experience and say, okay, let's map out and do the math, right? I'm gonna bring in X amount of business. Here's my current fixed overhead at the moment. Here's what I think I'm going to be doing from a volume perspective and on a transactional basis. And here's how quickly I'm going to have to lay the cash out. And here's how many days I'm going to have before I get that cash in. So that number is going to vary. There's a standard percentage. What that is off the top of my head, I really honestly don't know. I sit down, most people I'm working with are already beyond that, but I have that conversation with them as to, if you're going to start a brokerage, you really just need to think through that and sit down and do the numbers.
Mm-hmm. Okay.
What's your overhead going to be? How much business do you think you're going to do? How quickly are you going to have to pay out from a salary perspective and from a carrier perspective, from a purchase management perspective? And then, what's the variance that you've got to carry to make that happen?
Okay, so let's do this. So rule number one, not in a particular order, but it's going to be hard to knock this one off of rule number one. Have enough money to survive. Okay, to see it through. Okay.
Yeah. And if you don't know, you just need to find somebody who does. It's okay not to know. I think we all get, we get our pride worked up. We don't want to, maybe because we don't know, maybe we're embarrassed by it. Well, look, everybody comes from different backgrounds and have different interests. And I will readily admit here on the podcast that the financial, that took a long time for me. My brain didn't work like that. Mm-hmm. However, my wife was the CFO, mm-hmm. and her brain didn't work on business development. So we were a good match, right? I would bring the business in, but she wanted to make sure we were going to get paid in a timely fashion, get paid what we built. And it took a while to learn that. So I think it's okay to ask.
Yeah. Yeah, absolutely. Get help. And it's funny, your house sounds like mine. So I assume your wife manages all the home finances and all that stuff too, eh?
Oh yeah. We have a monthly budget meeting and my eyes just glazed over.
Yeah.
It's the last thing I want that I want to talk about, right? But we've worked, yesterday we were married 36 years and we looked at each other, we're trying to figure out how that happened. So we must be doing something right.
Yeah. Well, congratulations.
It's a good balance.
Yeah. Okay. So rule number two, not in any particular order.
Yeah, I think rule number two, I'm a little bit of a homer. I'm still on the board of the Transportation Intermediaries Association. I'd really encourage you to join the TIA. I think that there's a lot of value to joining the TIA. They can talk to you about best practices. They've got various educational courses. They've got a brokerage 101 course that you can actually align yourself with a business coach that'll walk you through that process. They educate and how to be a good broker, how to operate efficiently, effectively. In addition to it, keeps you informed as they're advocating on some of the rules, some of the government rules and regulations that are occurring, and keeps you updated on how to get things set up properly, both from a regulatory perspective, right, with your bond and your insurance, but also from an operational perspective. There's a lot of different opportunities there. So from an education perspective, we really learned over our lifetime when I was at Leonard's a lot from the association, both formally and informally at the various conferences.
Yeah, I think anytime, and depending on the nature of the business that we're talking about, but if you happen to be on your own, I think being solo is really difficult when starting a business. So not to suggest that this shouldn't be something that co-founders or multiple people should take advantage of, but I think in particular, people who are doing it on their own, having a community of support, education, and just others who've been there and done that is pretty invaluable. So I would definitely second that for sure.
Yeah, no doubt about it. If I look back over my time at the TIA, the relationships and the friendships, quite frankly, that I formed and created and invested in really came back to benefit me and really some unintended ways or ways that I didn't anticipate. So I would really encourage you. And then if you're a single operator, there's all sorts of online learning opportunities and ways to engage, from lunch and learns to webinars to virtual classes, with all sorts of ways to continue to stay educated on what's going on in the industry.
Okay, so rule number 2: join the TIA.
Yep.
I'm just summarizing this.
They did not pay me for that.
TIA or an equivalent association, which I don't think there is one, but if there was, then just to not be not to be too in their pocket.
Right.
The invoices in the mail, TIA. Again, I don't know there is 5. I just want to be clear to everybody listening to this. We're just kind of rolling with this. There could be 5,000, and I want everyone to know I'm kind of forcing Mike into this, by the way.
Right. So I think also I would agree with you. So I would say next, really, just is I think you need to put a plan together. Again, kind of like I talked about earlier, too many people just get going. And while I don't think you should get paralysis by analysis, I don't think just jumping into the deep end of the pool, at least if you initially jump into the deep end of the pool, at some point in time, you want to put together, what is your vision? You want to have some sort of roadmap, some sort of guideline. It doesn't have to be sophisticated. It doesn't have to be super fancy, but you want to sit down and do some self-reflection, is kind of maybe corny as that sounds, and say, what do I want to get out of this? Why do I want to do this? What do I want to achieve? Could be money, could be fame, it could be notoriety, it could be you just really enjoy it and you get energy out of it. But put a plan together of where you are now, where you want to be, and then how you want to get there. Put a few goals together that you want to achieve. Think through what are the daily activities we've got to do to hit those goals. Because as you start to grow and add in people, which is on the list, you want everybody to be rowing in the same direction. And a lot of times people think they've got a plan, but they really don't, right? It's not really specific. So for me, it's about having some sort of roadmap. And entrepreneurs get a little squishy when you bring this up, right? Entrepreneurs are like, oh, well, we're opportunistic. We don't have a plan because the plan is this, and we've got an opportunity way over here. We can't do it. No, that's not what I'm saying. You want to stick to the plan, but you don't want to be so married to the plan that you don't take advantage of opportunities that make sense for you and make sense for your company. It's finding the right balance, but you don't want to be playing whack-a-mole, right? And this is, as you well know, is a very it's a reactionary business to begin with. And so how do we minimize the reactions and whacking those moles down where you can? And kind of my role a lot of times is I like to bring people back to that plan, back to that roadmap. How are we going to achieve that?
Yeah, I think one of the hard things that can happen as you start to deploy these things, and I think this is where you talked about the squishiness from the entrepreneur, is that you kind of end up in this situation where you've got things change as you start to move. And so I think to your point, you're bringing people back, and it's kind of the way I think of it as a North Star. So you've got this what is the why, it's kind of what's the why, right? So why are we doing this, and what is the outcome? And to your kind of original point, what's driving this? It's fame, money, power, all the things. It's like, okay, so this is the thing. What's a quantification of that? So it's to earn X amount of money. It's to have X amount of days off. It's all these different things, and that becomes the North Star. And I think to your point, it's like you still need to have a sense of what that North Star is, but the guardrails on the sides can be soft. It doesn't have, it's kind of those bowling guardrails that pop up. They got give on them. You don't have to stay completely down the strike zone, and you're not going to lose your creative freedom as a result of trying to stick down this rigid. It's not a suggestion to stay rigid in your approach. Be flexible, be opportunistic when the time strikes, but you still need to have still need to be going down a road in a particular destination. There's this great line that I love, and I think it calls this. It's like, a plane flies from Chicago to LA, and on the journey it goes left and right, up and down, but when it gets to LA, it lands on a dime. So it's not how you get there. And so you kind of were talking about the how, and I think we're kind of saying the same thing, but in many ways, to me, the how is none of your business. It's really about the what and the why, and give yourself the freedom to discover on the journey. But as long as you know where you're going, you will get there. But trying to preordain how that's going to happen is a fool's errand, because it'll never be what you think.
No, and if you think about it, so I'm, one of my partnerships is with a learning management company called HubTech, and in their learning management program, what they talk about exactly what you're describing, and the destination should be specific though. It's no dispatch, in the example that they like to use, or HubTech will use, is, well, you don't dispatch a truck from, New York to Florida, right? It's going to be from a specific location in New York, it's picking up at 1, 2, 3, 4, Sycamore Street in Buffalo, and it's delivering to 6, 7, 8 at Lewis Street in Orlando, right? So the same thing. You want to have that specific destination so people know where you're going, and then, like you said, you can have those soft guardrails, but you still have to think through, like you said, what's that going to mean, so that we've got some sort of kind of roadmap to get there, right? Yeah. So versus you really want to go from Buffalo to Orlando, pretty much north to south. You prefer not to go all the way to California to get there, but the opportunity may present itself. So but you know where you're going to want to end up.
Yeah, exactly. And right. Yeah, I think buried in there somewhere to sort of to summarize that is, hope is not a strategy. So there is some strategic requirements to this. Okay, so point number 3, I think we're there, is build the roadmap, have a North Star, and creativity can still exist within that construct. What else would you say is a thing that these folks should be thinking about?
Yeah, I think really the next 2 things on my mind really are certainly technology. I mean, there's so much technology today. There's so much coming at brokers. What is sexy versus what is necessary. You've got to have. You don't have to have more than a spreadsheet, but preferably as you want to scale and grow, you want to have certainly a TMS product that is going to grow with you and is going to make sense, and then finding out what right technology as you continue to hit those milestones and hopefully grow your business to wherever you want that to be for you, that you've got the right technology to make things more efficient, to automate the processes, from dispatching a truck all the way, through to billing and invoicing that load. So I think certainly there are a lot more opportunities today from a technology perspective than, when Leonard started in 2001. And I think that's both good and bad, right? It's exciting because there's so much there, but you can get that deer in the headlights, and everybody's got TMS envy, right? There is not the perfect system. There's all sorts of great systems. It's about finding the right partner that's going to work with you to get you, because everybody runs their operation a little bit differently, as you all know. So how are we going to find a system that's going to work with us and possibly scale with us and help us achieve the goals that we want to achieve?
Yeah, and this may be odd coming from me, but if I were to think about I would actually start with as little tech as possible. And I would add it as you need it and you see fit to base on where you go. So as we talk about this journey, as you may understand the North Star, but you're not quite clear. And I think, and it's a good thing if you think you're clear on where you're going on this journey, then you're over prescribing, So it's like, in some ways, I think you start as low tech as possible, solve a real world problem, and let the tech be the enablement and the tool to do it better, faster, cheaper, and at scale. I think the risk of buying tech you start and think that the tech unto itself will be the competitive advantage is it's an absolute fallacy, and it won't work like that.
No, and many people that I work with have too much tech, and they're actually going through and doing a little bit of a reconciliation. Do I need this? What do I use? What do I have? And then when they do that, they're like, oh wow, I've got a heck of a lot more than I realized I can. And do I need it? Am I utilizing it? If I'm utilizing it, am I utilizing it efficiently? Right. So let's take a look at this and what's sexy and or nice versus necessary.
Yeah.
And really look at it. And how am I using this? Do I have this just because I wanted to keep up with the Joneses and I heard so and so had it and they liked it, and I'm using 1/10 of it, and my subscription is $1 bazillion a month? Well, maybe I need to relook at this, right?
Yeah.
But I agree with you. You definitely want to start small and take it from there.
Yeah. Okay. And then just at final moments here, let's close out with a banger, number 5.
People, right? It's all about the people. It's about you got to know your strengths and weaknesses and surround yourself with the people that complement you, right? If you're strong in sales, you want to bring someone that's good in operations. If you're strong in operations, someone in sales. I also think a lot of times people don't give enough attention to the back end of the company, as far as invoicing, as far as billing, as far as paperwork, the process to get that paperwork into you correctly, and so that you can get your customer invoiced correctly and paid timely. Certainly training, like I said, that's one thing that HubTech does. They've got a learning management program, and just like the TIA does, and you want to bring people in, and how do you train them to career path them up as you're moving up, and to, really, teach them, help them understand the business and educate yourself along the way. So finding good people, although it's a little bit easier now than maybe it was a year and a half ago, it's still something that you want to create that culture, right? You want to try to control what you can control, and what you control is your go-to-market strategy. You can control your internal and external messaging, and you control your culture. And the people certainly are a big part of that culture.
Yeah, and I would say that that might actually go to the top of this list. And I would say also that from the early days, and this is biased from where I've had success and where I've had failure. I would never do it alone ever again. That's one thing that I've had. Having co-founders, I just would never do a business by myself from a starting perspective. And I think to those, just to double down on this. Don't underestimate culture and its profound power, and don't give up on it, because it's a long tail value, not a short end. You may not see the benefits of culture in the first 30 days, but I swear to God, day 300 will be the most important thing you've done. And so sustaining the rhythm of culture and staying true to it and maintaining it and really, really taking care of it. This is something also that I've learned in real time through my experience at Rose Rocket. I am a firm advocate and believer that culture is probably the most important part of your business. And I think it is so often overlooked early days, because it doesn't change the narrative in the first 30 days. And you're so nearsighted in those early days. But the investment will pay off 1,000-fold downstream.
Yep, and you got to be authentic, right? Just because someone else has ping pong tables and foosball tables and beer in the fridge doesn't mean you have to, right?
No, that's not. Yeah,
it's got to be. Right, you have to be, and that's not necessarily, that's part of culture, but that's not the culture, right? And you've got to know, people got to understand your values, people got to understand the whys we talked earlier. And if you've done some self-reflection and you're understanding why you're trying to accomplish what you're trying to accomplish, and then you can communicate that to your people, and you're empathetic to your people, and understand where they're coming from. It's huge. But it's a matter of communicating that, and people see through the baloney, right? I mean,
100%.
so you got to be who you are, and those people that like that will gravitate that, and those people who don't will find other places, and quite frankly, that's okay.
Yeah, like attracts like.
I was just, if you're hard-nosed charging individual, that's who's you're gonna attract. If you're have a different, more empathetic approach, that's who you're gonna attract. It doesn't make it right or wrong. It's just you need to understand that and make sure that everybody understands that.
Yeah. Ping pong and beer does not make a culture. Those are just byproducts of a particular like. If you want to attract people to your business, maybe you want a business of people that don't really value drinking or don't drink at all. Guess what? Don't put beer in the fridge, right? So I think it is all a reflection of what kind of company you want to build, what you want those values to be. And yes, couldn't agree more on that. Mike, I know you've got to run. I really appreciate having you here today. Thank you for that. Thanks for this little quick experiment we did, and being patient with me as we tried this on for size.
Thanks, Justin, and I appreciate you accommodating me. And feel free to reach back out. You want to talk about anything further?
Happy to do so. Well, I'm sure I'll see you soon. Thanks everybody for this quick listen. Don't forget to like and subscribe. Be well.